Hey, puppy trades. I don't know why I started doing the voice like that. Anyway, there's this old quote in the market community. I think it's from Peter Lynch. He said all the math you need to be good at the stock market, you get in the fourth grade. I'm not quite sure that's true. If he's referring to exponents, he's certainly right, and proportions. But I think that there's another aspect of the stock market similar to that. When people talk about like market gains, right? As much as people like to say I'm conspiratorial, Finchwit and the entire stock market community is full of a bunch of tinfoil hatters. They're always talking about a shadowy cabal, called the MMs, who are moving the market, effing retail. You'll hear that every morning. As soon as you wake up and go to stock twits, someone's talking about getting effed in the A by the MMs because of the games they're playing. And I think similar to Peter Lynch's quote, all the math you need to be good at the stock market you get in fourth grade. I think very similarly, all the games you need to know how to play, you learn how to play in fourth grade. I know it might sound weird for some people, but the two games I'm specifically referring to, we're going to talk about in this video. The first one is follow the leader. We'll talk about what that could mean from a technical analysis standpoint, an Elliott wave standpoint, and even analyzing the options market, right? But there's another game people don't like, and it's just the simplicity of A, B, C, 1, 2, 3. And this was a chart before we get into Coinbase. This is just maybe a better example. If you're new to Elliott wave, right? Elliott wave theory, people think we're voodoo. I was looking at this one. I'm pretty sure I found it on the exact same screen that we're going to go over. I'm going to go over a screen called Unusual Options Volume. But I was looking at Albertsons. I think Albertsons was on this. So let's just recap what the 535 sequence is. Kind of the basics of Elliott wave. I think this is a very good example, what's going on. In Albertsons, I can't really think of a ETF or, a stock like Albertsons where, they're in the exact same ETFs. Albertsons is a top holding, and then there's another, big top holding that's very similar. But, that's kind of where the best, in my opinion, correlation analysis is going to come from, is when two stocks are top holdings of the same ETFs, preferably the same, most liquid ETFs. And they make very similar highs, very similar lows, and have very similar wave counts, and then one plays the leader role. And that's when I start looking for evidence that, some reasonable followers might be taking place. So I am getting a little sidetracked here, but I just wanted to kind of recap kind of the basis of Elliott wave. I think this is a pretty clean count from Albertsons, ticker ACI. I think I read this right in the description. It says that Albertsons and Tom Thumb are owned by the same company. Don't quote me on that. I just read that in this little price overview description. But really? Albertsons and Tom Thumb owned by the same company? Isn't that just like matrix breaking? Like that was a big one for me. I mean, I knew the Democrats and the Republicans were on the same team. I knew, I knew the people telling me to go to bars on Saturday, and then repent for my sins on Sunday were on the same team. But I didn't know Albertsons and Tom Thumb were on the same team. That one had me shook. Oh man, that was a wake up. That was the red pill, man. I thought I had woken up I found that out. I'm gonna need to take a walk after this, honestly. Think about life. Anyway, I think this is a pretty good example of the 535 sequence from Albertsons. I always like to go down here and label this RSI. I usually say I won't for the sake of time, but it's just so useful. In the 535 sequence, I think it's very useful. I stick to the weekly time frame. The monthly works well too. Sometimes the daily count's very important. Anything below that, you don't want to fall into that. I don't want to fall into that stereotype as the Elliott wave theorist. Some people like to go count those, 30-minute candles. I don't know. That's how you end up behind the dumpster. Anyway, 1, 2, big wave 3, where we see the highest reading within the count is made on the RSI. We have a shallow wave 4 correction, and then a wave 5 that makes a higher high, but it ends with momentum divergence. Okay, so that's a great example of a 5 waves up. Now for the 3 waves back, it's an A, B, C correction. What I did is I took the fib extensions. I took the length of wave A, placed the wave B high. That's where I got this 100% extension hit. And so we're between, for Albertsons, the 78.6 and the 61.8% retracement. And I could go down in this daily count and divide this too. But the bottom line is that, just kind of the basis of the 535 sequence, the 78.6% retracement, great level. The higher the beta of a stock, the more likely the 78.6% retracement is going to get hit. And so that's just kind of a reality of Elliott wave. But I don't think the 78.6% retracement is going to go, even if it did in this case. I think that's the best downside level to be above for now. And I think that above that, there's a very reasonable expectation that this is 5 waves up, this is 3 waves back. So in the long term, eventually, we're going to see wave 2, wave B get put in, if it hasn't already, and see Albertsons make a wave 3 C to a new high, right? There's a lot more that goes into stock analysis than this, and this is technically the voodoo part. But when I get into, crypto in a little bit, I just want to introduce kind of the logic. Let's say there was an ETF, and the top holdings of this ETF, they tracked whatever Albertsons official, whatever their official sector is, right? These big wholesale, grocers, stocks like that, right? And so this ETF that tracks grocers and stocks like Albertsons, let's say that it formed the exact, very similar wave count as Albertsons. Wave 1/wave A, wave 2/wave B at the 61.8 to 78.6% retracement. We could even see that the dates and kind of quarters of these levels were hit, right? And so let's say that this hypothetical ETF, that had a bunch of grocers in it, had Albertsons as a top 9 or 10% holding. And then we saw Albertsons go on this kind of breakaway run where it went, and it actually went all the way and broke this high, while a lot of, the whole ETF was still kind of in this range. This would be a wave 1, wave A, wave 2, wave B. So I spent many, many months asking, in this hypothetical situation, if wave 2 and wave B was going to get put in for Albertsons, and wave 3, wave C got entered, right? So if Albertsons did go up, then I'd look for, the rest of the ETF, if not just the ETF itself, to have a real big hint that the correct count for it is that it's going to go follow wave 3 and wave C. Now, that sounds silly or voodoo. This just happened to the entire software sector. The entire software sector, Adobe, CrowdStrike, especially large cap software, did something very, very reasonable. They followed Oracle and Microsoft to pretty damn near an all-time high. And I was all over this. And Microsoft followed Oracle. Microsoft was still down here when Oracle was way up here. And I was like, whoa. Aren't these in the same ETFs? Adobe, Microsoft, and even IGV, the ETF itself. IGV was still like down here. when one of its top holdings, Adobe, had run away, and anyway, that's just kind of where the idea gets introduced. So let's get back into Coinbase. I took a little bit of a left turn, but, this is kind of that hypothetical scenario I just described, and I think has occurred many times. I think we're basically seeing it occur right now. With semiconductors, so many semiconductors. If they haven't followed Nvidia to an all-time high, they've gotten really damn close, and really gone up and retraced most of that correction. From the 2021 high. Anyway, Coinbase and unusual options activity, and kind of the very specific nature of this ETF, and the fact that Coinbase is a top holding of a lot of ETFs, may be an example of a hypothetical scenario I just described with Albertsons and a grocer in a sector that isn't so hypothetical. So I'm in Coinbase and CONY, I'm in Bitcoin, I'm in Litecoin, I'm long Canaan Creative, and I'm pretty sure I've got enough crypto exposure for now, but I am a little interested still in Maxi, MAXI. That's an ETF that is so far done what a lot of people think is impossible in this current environment, but a lot of these ETFs, especially the actively managed ETFs, are trying to do two strategies at once. Simplify has a few of them. I think Maxi, MAXI, they are running front month Bitcoin futures, very similar to BITO, and then they're also selling credit spreads and yielding 10% from options premium while tracking most of the move. Anyway, I've been a little interested in that. But let's get back to the charts and why I'm making this video. A while back, I had noticed that Coinbase went wave 1 and wave 2, and then it broke this high, for what could have been another wave 1, and then it went and it rested at the 61.8 to 78.6% retracement, and it was on some screens that we're going to get into later in this video. It was all over the bar chart, straddle and strangle screener. And so you look at Coinbase right now, I do think, yes, this was wave 1 and wave 2. This is another wave 1 and another wave 2. So what are kind of the basic rules for Elliott wave theory? Well, unfortunately, we have to address those pesky bears, and especially with crypto, not a bad idea. But what are the pesky bears going to say? The pesky bears are going to say, this is wave A, that's wave B, and this is an expanded flat wave C, and it's also a truncated wave C. So that's a fancy way of saying that this is a wave A, it's a wave B, and it's I guess what would they be saying? No, if it's an expanded flat. Okay. The Bears have two options for Coinbase. The first is that this is a truncated wave C. Basically, they think this is a corrective structure. Anyway, I didn't want to get too much into what the Bears say, but they're going to say this is either a truncated wave C. In that situation, this is wave A, and this is wave B. So what are they arguing? What's truncated mean? Well, truncated means almost most of the time, as far as Elliott wave theory is concerned, wave C is usually very, very, very often, most of the time, at least the length of wave A placed at the wave B high. So, or in this instance, wave A placed at the wave B low. That means the equal legs target is roughly 136 for Coinbase. It's at 115. So in the very short term, the bears are in front of a truck, calling this a truncated wave C with really no evidence at all, right? From an Elliott wave perspective. What's another thing, they could be saying? I don't think it would make too much sense in this scenario, but this is kind of what the bears always say when a stock or ETF invalidates their count and breaks to a new high. Most of the time, they haven't even seen it yet. They just stare at SPY. So they'll say, this is wave A, that's wave B, and this is what the expanded flat is. It's where wave B, there's a wave A, wave B breaks to a new high, which it's not usually supposed to do unless it's an expanded flat. And so that way they can still call for wave C. That's probably not what they would do in this scenario, but it's important to know because that's what they do most of the time when tech, semis, the market, basically anything, invalidates their count and breaks the new all-time high. Anyway, what has been given a little bit of evidence, at least, is what I suspect, is that this is a wave one and a wave two. This is another wave one, and it's another wave two. Wave three of wave three is in progress. The RSI is giving a little bit of a hint that's the case because in Elliott Wave, there's a rule that says wave 5 ends with momentum divergence. So on the weekly chart, momentum divergence has been erased. I think that suggests, I will go down to the RSI and count it out, that this is wave 1. This was wave 2. So what would the... What could the bears be saying? The bears could be saying, from a price standpoint, this is wave 1, wave 2, wave 3, wave 4, and wave 5. There's a few reasons that doesn't make sense. One, wave 4 is not supposed to go way, way, way below the wave 1 high and past the 61.8% retracement. There are exceptions to every rule, but when a stock goes all the way down past the 61.8% retracement and it's closing kind of deep below the wave 1 high, that usually means the wave 5 setup is not the best or most logical thing for wave theorists to look for. That would be one reason. Another reason is that the RSI has also hinted that's not the right count because this is 1, 2, 3, 4. The bears would have been looking for momentum divergence. That didn't happen. So that would have been the wave 5 setup. Instead, again, it suggests wave 1 and wave 2. So there are ways to be very precise. One way to go about it, taking the fib extensions, the length of wave 1, place at the wave 2 low, wave 3, especially for a real volatile name, can be aggressive. And especially when the institutions were loading strangles and straddles and, all types of stuff. Wave 3 can go past, the 130s, the mid 130s. I would say that's the equal legs target. Even if that was hit and there was a shallow wave 4 correction, bulls would still be looking for a wave 5. What both of these fibs suggest, the 161.8% extension of wave 1, and also this is another one that's just kind of lining up with it, the 127.2% extension of the length of wave 1, place at the wave 2 low, can kind of be a uncanny place for wave 3 to end. And I think especially with it lining up right there, kind of perfectly, 155 to 156, kind of screaming right now. I think 136 to 137 also would be the equal legs target. So Coinbase, big move, up pretty high. Person on YouTube making a video about it, right? What's really kind of the, we'll see what the MMs are doing. Are the MMs loading up Coinbase today? We'll talk about what I think the MMs are doing and maybe how they're going about this information from Coinbase, if they don't all own it already, what they might be doing or what it looks like they're doing. We look at MicroStrategy. I had this chart untouched. It's not the prettiest. I tried to give a conservative. It's a big chart, so the 2-year view is kind of ugly, but this might be the best one right now. 2-year time frame, but it's daily candles. That's why it's kind of ugly. What I had as a conservative view is that this is wave 1 and wave 2. This is 1, 2, 3, 4, 5 waves up. Again, that didn't really make sense because we were at the 78.6% retracement. But because MicroStrategy and Coinbase are very volatile, I'm gonna give that exception. And just give them the benefit of the doubt that they're looking for a wave 5. We look at MicroStrategy's RSI. This is the daily. We'll check the weekly too. I believe that high was 83.45. This high is 82.89. So the bears are still going to argue that this is a wave 5 that's ended. Okay, the bears are still going to argue that this is a wave 5 that's ended. I don't think that's a good bet. They're going to say we're right at that target. So if MicroStrategy does go make a new high, that would really kind of invalidate their count. Because it's right under there, they're kind of making a silly argument. I guess it's not a silly argument, but what they're going to say, even with Coinbase breaking to a new all-time high, even with Bitcoin at highs, I don't know what bear in their right mind is going to go for this wave ABC. They might look for something like this. I personally think if that did occur, this would be a good gauge for the next, buy possibly in crypto. But that's all it is to me. I can't imagine, seeing, Bitcoin and Coinbase at 52-week highs. And this is all from an Elliott Wave perspective. I mean, some people, they don't care about Elliott Wave and, think this is all voodoo. I'm trying to show in this video how, more logic can be applied to it. So the weekly RSI, like I said, is my preferred metric. So let's get the weekly count in general is kind of my, go-to time frame. Weekly chart looking at 3 to 5 years of data. Anyway, if we look at this weekly RSI, it looks like MicroStrategy goes wave 1, wave 2, and just looking at this weekly RSI, this high is 69.73. This high is 69.86. Yes, it's a little bit of a hint, just like Coinbase, and also with the 78.6% retracement, it's a little, it's pretty good evidence in my opinion. That's not a wave 4 that ended, and MicroStrategy isn't within a wave 5. Yes, this is another wave 1, I know, and this is where it gets a little crazy. Well, we'll talk about what the MMs are really doing. Are the MMs, watching a YouTube video and loading up MicroStrategy at 500? They might be. I'll be honest, I got no clue. But we'll talk about what the MMs are actually doing. I think MicroStrategy is giving a little bit of evidence that this kind of more aggressive view is that this is a wave 1 and a wave 2. That wave 3 target, the 161.8% extension of 600, that would make sense. That kind of logical 600 number. Let's see. The 127.2% extension, just like Coinbase, kind of helping, refine the price discovery of wave 3, what it could look like. It's already at the minimum equal X target. I think the more, volatile push that MicroStrategy and these crypto names, especially with the options activity that I've seen, would suggest it's going to be more of those wave 3s that gets up to the 127.2% extension of wave 1 places the wave 2 low. A little, I think just right is this 161.8% extension of just the length of wave 1, which is 604. And then a little too hot, that Goldilocks level, if it did run away, the 640s without stopping would be a little interesting. Anyway, MicroStrategy and Coinbase have made new highs on price and in the weekly RSI. And I think they've invalidated what most bears had. And that's not even to mention that Bitcoin's, broken out to a 52-week high, again. And so I can't wait to see what those bear counts are. Anyway, it's not about, I think, especially with crypto, humility is the best, is the name of the game, especially, for bulls, but I think that we are, this is an aspect of, stock analysis in general that's hard for people because, crypto, kind of moves at its own whim, right? It's a computer code and no one really knows what it was, what it is. The bears think it's, just the internet Ponzi scheme, like the Dutch tulips. And, one day we're going to wake up and they're all at zero, right? And so when it does start to get running away and everyone's getting bullish, it's a very, big temptation to just keep calling the top and, saying everyone's getting too bullish. And, Elliott Wave is where, while it seemed to be esoteric, that's where actually a lot of logic can come into the price targets and also the downside levels. So anyway, this is one of my favorite screens, unusual stock options volume. I don't have it refreshed. This is just what it looks like. Now, I'm particularly interested in stocks with the lowest implied volatility rank on this screen because that's going to give me a pretty big hint that these are options being bought, and also that they're options being bought by MMs looking to take advantage of a market that's not really expecting a big move, but they are, right? So, and they, are also the powers that be. We look down here, not really surprising that a stock that's up 23% in one day had 239%, 239% jump, or jump compared to its average 1 month volatility percentage. Anyway, we see back to this is a crypto miner, BKKT, 9,559 calls to 443 puts. And there's another one on here that was actually down pretty substantially, Bitfarms, BITF. That's a penny stock, but it also, even though it was down today, very similar to BKKT, a big, bullish skew. Now, I don't think it's a good idea. Here's Albertsons. This is why I was looking at Albertsons today. It was on the screen too. A little bit of a bullish skew. I don't think it's a good practice at all to go look down at a stock like, look at this one, Far-Fetched, right? FTCH. This stock has 18,681 puts to 3,300 calls, right? And the implied volatility rank is at 100%, right? So is it good to assume that with this stock, being crushed for years to the point that it's, the chart speaks for itself. We're not going to look at it for this video. Most people would look at this and assume, okay, well, the MM's bought a lot of puts, while IV rank is high, and this stock's in a bear, right? So they're looking for it to go down. But what are they really probably doing with 18,680 puts, on this stock? I suspect what they're actually doing, and we can just look at Far-Fetched just so it's not too confusing. I suspect what they're actually doing is they're running the married put strategy. So while it looks like, this is a big bear bet, what they could actually be doing is they could be using married puts to pick out a cycle low on a growth stock, right? So retail would look at that and assume just because a bunch of puts were bought, that's a bearish bet. The reality is that they could be doing they could be using those puts, and actually the fact that they're paying so much for those puts could be suggesting they're running what's called a married put position, right? So if the delta, let's say they bought the 2 put, right? The stock's at 1.74. Let's say they bought the 2 puts and it had a delta of negative 74. That means it had the equivalent exposure of being short 74 shares of stock. Well, what they could do is they could buy 74 shares of Far-Fetched, right? Or, and then that's called a married put, right? If Far-Fetched explodes, then the delta of the put is going to shrink. The calls, or not the calls in this situation, but the long position, the long exposure is going to stay at 74. The delta of the put, though, as Far-Fetched goes up, is going to shrink and shrink and shrink, and it's going to become a net long position, right? And so that's how they use married puts. This works best usually with stocks that pay dividends, but they can also use this, for growth names too. And what would the other thing they could do? Well, if Far-Fetched does keep crashing and eventually have a reverse stock split, those options are going to be adjusted to be made whole after the reverse, and eventually the delta is going to be the equivalent of being short 100 shares pre-split, and so they could offset those puts completely by taking a negative 100 position, and then they could exercise the put. Anyway, that's all a fancy way of saying that going to this screen, which is unusual options volume, and, seen that, oh, like this stock, it was all skewed to the puts, or this stock, it was mostly skewed to the calls. That means it's going up. That's not, in my opinion, a good interpretation. But it does give a lot of evidence that the MMs are looking at these stocks. Anyway, here's why I think, really the reason I made this video is because if we look at this screen, this is really one that I like. It's unusual ETF options volume. So what I notice here is that block is on this screen, BLOK, and so is BITQ. So very interesting. Let's just make sure we know what this is. So this 1 month volume percentage change is the percent change between today's total options volume and the 1 month average total volume, okay? So if we look down here, we can see that block had a 45% increase in today relative to the past month, and so did BITQ. So we're going to look at what these ETFs hold and see why the MMs are taking a position and what they may be suspecting, and where maybe like the software sector, like a similar setup we saw with industrials where Caterpillar broke to a new high before XLI. Like a lot of times we see a leader in XLK, whether it's Microsoft or Apple, break to a new high after a correction, and it acts as a leading indicator that the ABC correction and that, very correlated ETF, is also going to be resolved. If we look at both of these holdings, we see Coinbase and MicroStrategy are top holdings. So if I wanted to be really, really precise, I would have gone to their websites of these ETFs and gotten the perfect update. Let's look at this ETF again. Oh, baby. Did we just catch them? No, this isn't naughty. They're allowed to do this, but man, look at this. I mean, come on. The two biggest holdings are MicroStrategy and Coinbase. What? Isn't this kind of glaring? What do you think they're doing? Oh, come on. What do you think they're doing? I'll tell you what I think they're doing. I don't think I think they're looking for a follow the leader setup, right? Follow the leader, wherever they may go, right? Wherever they may go. The two top holdings of these ETFs just broke this same relative high. And then they took unusual options positions on these ETFs. And let's just make sure we got the facts straight. 331 calls to 89 puts. That's a bull bet. BITQ. 143 calls to 2 puts. That's a bull bet. So what? People think these guys are so clever. What did they really do? They saw MicroStrategy and Coinbase break new relative highs, and so they just spot calls on the ETFs that have them as the top holdings and are betting that they're going to break this same relative high. And they're the people who kind of run the market. So, them taking all these unusual call bets. Anyway, I'm not trying to get into that. That might be a little extrapolating, but aren't these the exact same setups as Coinbase and MicroStrategy? And we had the same debate for the same few months. And what happened? Follow the leader. That's all that's going on. It looks like it. Who knows, man? Who knows, right? But, this is what upsets people. I think when I first came onto the scene, I didn't realize how controversial it was to be saying, hey, I think Wave C is going to reach the Wave A target, and Wave C is going to take the same amount of time as Wave A, from the equivalency standpoint. So if the Wave B low holds that, I didn't realize that was controversial. So I wasn't just saying, hey, like, I think, Wave 1 placed at the Wave 2 low is going to be hit. For Wave 3, I was even saying, hey, this was a 4-month rally. So that means this, in theory would be hit 4 months from this low, if the low hold. People said I was calling myself Nostradamus and all this stuff, and they called me names. And then, they'd call me names and I'd, get some crazy stuff right that they had, really been adamant was evidence actually, that their short position was going to be a great idea. Hey, this Furu bull is bullish. Microsoft, Nvidia, Apple, and, Bitcoin and, Tesla. That means that, and AMD, that means that my short's going to hit. I was like, dude, you're an idiot, man. That's the dumbest thing I've ever heard. And they were like, no, you're a Furu, man. I'm counter trading you. I'm shorting Merck. I'm shorting AMD. I'm shorting Bitcoin. I'm shorting Nvidia. I'm shorting I'm like, dude, what is wrong with you? Like, really? Your ego is that big? And this type of stuff would just piss them off, man. But, this is one of my favorite setups. Very similar count. Right? It looks like it's one of the MM's favorite setups, right? MicroStrategy and Coinbase. Just ripped above this high, and they took a big bull bet on these ETFs that have the exact same holdings, and the exact same setups, that they're going to break this high, right? And so, and this one particularly, BITQ, kind of looks juicy. I don't know. 6.17 over 6.7. I mean, that's a little wide, but, and maybe a better way, because I'm already long Bitcoin and Coinbase and CONY and Litecoin and CONY, but maybe a better way to, think about it is, regarding Bitcoin and regarding, some of these cryptocurrencies, if I think that it just kind of logically makes sense that BITQ and Block, are going to follow MicroStrategy and they're going to follow Coinbase above the same relative high. And this is all also based on a belief that like computer algorithms are running the market. But, when the ETFs get involved, that's where kind of the correlation goes from what they call ursory correlation, right? They're not actually correlated. You just think they're correlated, right? That's ursory correlation. When the ETFs are involved, they're in the exact same holdings, which is something I point out with IGV, where Oracle was at an all-time high. And I was like, guys, like, wait a minute. IGV and the whole rest of the sector, has barely gotten off the ground. Very similar thing happened with Nvidia and semiconductors. And it's not just, 2022, 2023. And, it's not just 2021. And one sector, this is something that I've done systematically with, a lot of sectors where very highly correlated assets participate in the same corrections. The top holdings of the ETFs play the leader, so I look for, the rest of them to follow, right? Well, what's kind of another way to look about this? Well, a lot of people are going to look at Bitcoin and they're going to look at, not necessarily Ethereum, but like Solana and some of these cryptos that have gotten, off to these big hits. And, they're going to say, oh, like, these are easy shorts, man. But looking at the rest of the sector, if I think that BITQ, is still got, $5 or $6 to the upside before it reaches its equal legs target, even Coinbase and MicroStrategy themselves, the mid 130s, and I even think the mid 150s for Coinbase from Elliott Wave perspective, really jumping the gun. MicroStrategy could be up in the, upper 500s, before, its next pullback, and that's just within a relatively short-term count, right? Ethereum had a very similar leading indicator with, I think Solana recently, where all these Ethereum-backed tokens, or some of them, broke out in the wave 3 of wave 3. I posted about this recently, but I think this is wave 1 and wave 2. We're going to see, Ethereum's next equal legs target, which is very, minimum in short term is 2,281. And if wave 4 retests the wave 1 high, we have a wave 5 that's at least the length of wave 1 places the wave 4 low. Ethereum could go 1, 2, 3, 4, 5 ways up, up towards 2,800, right? And so all of that, is just kind of to bring a little, logic into what can seem like, very, esoteric things, right? Cryptocurrencies, these, computer codes on the blockchain somewhere, people are buying monkey pictures, NFTs, and, no one really knows what's going on or moving the price of these. I think that, follow the leader and, ETF correlation analysis and, ABC. It might be a little too simple for some people, and, maybe they're right.